What's up, YouTube? It's Louis here. I hope you're all well. Today we'll be looking at Bitcoin on the daily time frame and go from there. So, of course, we had this falling wedge, like over a 65% chance of breaking up, meeting its technical target back at 69k. But you actually broke down below. You had a shooting star at resistance of the falling wedge, as well as the EMAs, the 12 and the 20 daily EMAs. Rejecting the 20 daily means you are going to now put a lower low, which is now what we've done. Now we've rejected the 12 with a shooting star again and back tested the outside of this falling wedge as resistance now. So of course that's negative, but it didn't get too much movement to the downside, and the reason is because once we've measured this impulse to the upside, you come down to the magnet area of the golden bucket, the 050 to the 0618, and that's why we've got a bounce. So technically now we should go and break 38,900 and actually break back inside of this falling wedge. When you do break back inside of the falling wedge, technically you should actually break out of it to the upside, and then obviously meet its technical target back at 69k. But it's not as simple as that. You see all these lines, well, before they were green or purple, but now they're red, just to signify that they are resistance points. So first of all, I actually need to add another resistance point on the body candle close down there. So first of all, look how many resistance points are ahead of us before we can even flip back bullish. First of all, we've got the head and shoulders pattern technical target at 26k, but the longer it goes and the less volatility there is at the moment, it's like making it less likely that we will go down there. But technically speaking, once you held resistance here, you should go down to support. So this is why 28k is now our new target. Of course, if we do capitulate and we do close below and use it as resistance, then we will look at these targets. But for the moment, how stuff is acting, yes, you come up, but it's like correctively coming up. Of course, it can change, and we'll look at the 4 hour and see if it is changing. But I wouldn't really like it to go up without an accumulation period like this. So without that, it would just look a bit sus, maybe like a dead cat bounce. So technically speaking, you know how we've been saying 42k because it is the 1414. Well, actually, it could be until 40. Well, it depends how. Well, let's say you come up to here on the 18th of March, takes you to get up here. Well, you'd need to get above 45k, because all you could be doing now, if we do come up, is just getting a retest of this for continuation down. Like, that would be very, very, very nasty, because obviously once we do get above 39k, everyone thinks we're in the clear, and then we're going up, and then you could come up to 45k and still get rejected. So it's going to be a heart attack moment, and this is what Bitcoin loves to bloody do. So we need to be prepared for it. Of course, if we're looking over here, there's some multiple bullish candlestick patterns, more bullish than bearish, but obviously the most significant one being that retest now of support flipped into resistance. Now you do have like this bullish, this bullish, this bullish, this bullish, like 4 bullish candlestick patterns. So yes, technically we should see some upside, but we know that when we're in a downtrend, bullish candlestick patterns tend to either work in the short term or not at all, really. So you can see another one here, another bullish candlestick, didn't work whatsoever and dropped. So could this be the same case where, in this case, after getting this one, we're getting a short-term rally to the moving averages, like this one, to the moving average, get rejected, holding the golden pocket right here, having a bounce, and then potentially getting rejected by the 20. If we get a 20 daily EMA rejection, this would be a beautiful short opportunity, or a beautiful sell opportunity. Short if you're trading, sell if you're trying to reaccumulate. Of course, not financial advice whatsoever. Everything that I do personally is in my crypto group chat. So that is what I'm specifically looking at. What is the reaction from 39k? It'd be very sus for me, very suspect, if we do just break above it. We're on the first attempt. We know that not every time, but a lot of the times when you do break something on the first attempt, it usually ends up in a fake out. It's not the case every single time. But yeah, we don't really like to see it, basically. And yeah, you are showing multiple bullish candlesticks. Is this just a trick to trick everyone and think, yeah, we're bullish again? Because I wouldn't be bullish until, we're above 39. to 42k. But even if we do flip 43k into support, we still have that head and shoulders neckline that we need to worry about still. So you can see we're below 1, 2, 3, 4, 5 major key levels of resistance. There is a lot of work to do, and that's why I'd rather get rejected now, come back down, reset, and basically create patterns way down here, and then eventually going up, rather than trying to attempt to get up straight away, more likely to be a fake out. So let's head over to the 4-hour time frame quickly. We can see that there is a potential double bottom playing out. You can even argue this is also a cup and handle here, with the handle like this. So I can get you your technical target from the swing low, or sorry, let's do that again. So that's the body candle close, and we'll do it, sorry, that's the neckline, and this is the body candle close. So once we do break out above 38,000, which we know is actually this daily swing low over here. Let's go zoom in. Oh, sorry guys. Yeah, that daily swing low over here, 38,100. That's the resistance slash the neckline that we need to watch out. You can see exact neckline. So you can see that there is a double bottom, one bottom, neckline, second bottom. It's a double bottom with a higher low. You actually can get double bottoms with lower lows, just like this one bottom, neckline, second bottom. So this is just the opposite way with the higher low. And you can see even inside here you had another double bottom. A lot of people, and I included, thought that this was going to play out, but what stopped us from playing out is we failed to break below that golden pocket. So that's bullish. That's actually very bullish. So now we're going to attempt to break above, but we have this resistance point and the neckline, the descending falling wedge now resistance, and the double bottoms neckline. So if we do break out, you can see you would have a technical target up here at 43k, just falling shy of that head and shoulders neckline. So guys, you can see that if we did come up to here and we come back to, let's say, 39k, you could see that potentially an inverse head and shoulders playing out. If that does, then yeah, we could be well and truly on the way to just heading back up and getting back above this, because this over here would be your head and shoulder, inverted head and shoulders neckline. Just like it's the regular head and shoulders, it'd be the inverted head and shoulders neckline, and you need to hold it as support for continuation upwards. So that's, I can actually get you a technical target for that already, guys, to be honest, because we know that that is the neckline from the lowest point back to the neckline. And you can see if we do eventually hold this as support, we would have an impulse up to 58,000, but a lot of hopium right now. It is a lot of hopium. So obviously we need to do the first step first, and just creating the head, and this double bottom is potentially going to do that. Fail to get above this, you would be putting in a lower high, and technically you should roll over and lose this low, the lower low, and you could see that would be losing that golden pocket of the 050 to 0618. Of course, this support can hold. You could form an even larger double bottom too here, and this could hold as support, and this is actually our monthly support. Let's go to the monthly. That green line is our monthly support over here. So actually you could be doing a double bottom. Right now you are above the 20 monthly MAN. So this is why I've always said that yes, we're in a weekly bear market. It just means a weekly downtrend. I'm not talking about the major bear market. We're just in a weekly downtrend, so you can't ignore that. Inside of a larger bull cycle, a monthly bull market. This is what I've been repeating on the channel. So not much more to say. We know what's going on. Obviously hold this as resistance. We're going to roll over. I can check for some divergences. No, none at the moment. So let's say we did close below this high, and this managed to actually go higher than this, then we would get some bearish divergence. But no, we don't have any at the moment. We could say that this is lower than this, so technically we do have some. Well, let me just double check. Yeah, so on the RSI we have higher highs, so this high is here. On the chart we have lower highs, but on the RSI we do have higher highs. So this is bearish divergence, and the bearish divergence line is actually this resistance point. So to go ahead and break this bearish divergence, obviously we need to start making a higher high above this 39k level. Once we do put a higher high above that, then you would invalidate this 4-hour bearish divergence. Until then, we're just seeing are we going to coil up and break this and validate the double bottom to 43k, or are we going to roll over now? Let's see. Thank you guys for watching. Please like, subscribe, comment, and I'll catch you in the next one. Peace.